Hello, investors. It is Connor Bates, Associate Portfolio Manager with Revere Asset Management. Today is Tuesday, September 10th, 4:30 p.m. Eastern Time, with tonight's Revere Roundup Daily Market Insight video. Market state, we still have it labeled as a mild correction. If we look over at the trend gauge here, market leaders, we still have them in a bearish downtrend with the yellow sub arrow. Short term, this is our 21 EMA, red arrow there. Medium term, this is our 50-day. The RSP, which is the S&P 500 equal weight, and Dow Jones holding, S&P not, and then 200-day green arrow there. So final numbers, 21 over 21, down 20, down 0.21%. Big 8 up 1.27%. RG8 up 0.14%. S&P up 0.45%, equal weight pretty much flat. QQQ up 0.92%, equal weight up 0.4%. Dow Jones red down 0.2%, mid caps down 0.22%. Russell 2000 pretty much flat, 60/40 down 0.64%, and in-house GROTECTION up 0.15%. And as you can tell by the final numbers, it was predominantly led by tech today on this bounce. So let's get into the inter-asset correlation. As always, we'll start with the S&P 500. So decent day today, closing high a day and challenging right at that 50-day and 21, down 20 basis points below the 50-day, 40 basis points below the 21. And positive to see this holding this 100-day moving average and seeing some decent volume on this rally. And then you do have the stochastic pretty oversold. If we zoom into a 60-minute, so we held 5,400 on this decline, and now we're trying against 5,500 again. So those are key levels to watch going to tomorrow. And obviously we have the CPI. And then when you look at the weekly, we held this 21 week and it's moving up. It's at 54.10 now, but positive to see that holding. And most bull markets, when they retest that 21 week, they hold. So as long as it can hold above that, longer term time frame looks good. RSP equal weight lagging today, but it was the bounces primarily led by tech. This one's forming a pretty nice flag here, right below 52-week highs. IBD 50 just showing this, sitting right at the 200-day. QQQ. So led today on the bounce attempt, but in the market cycle, this one is lagging. You can note the relative strength here, shows the weakness, but this is putting a higher low here coming into the 100-day. You got the 21 and 50-day above. And on the weekly, it is holding this 40-week moving average. So that's a good sign. And it is 1% below the 21 week. So if it can reclaim that, that'd be a positive sign. The Dow right at the 50-day. Mid caps weak again. Just kind of in a range, not a whole lot to say. This 200-day has to hold. Russell 2000, similar. This one actually bounced right at the 100-day, which is good to see, but still had that 50-day above. And it looks like the 21-day is about to roll below the 50-day. So something to watch. And obviously rate sensitive sector. So this could be the big mover in CPI tomorrow, whatever way the market decides. VIX. Good to see this today coming back below 20. That's a good reference guide. Over 20, just expect larger price swings and volatility. And then if we continue to slide below 20, should smooth out trading, and leaders should act a little bit more smooth. Dollar continues to build off this low, built that higher low, and now it's starting to consolidate a little bit. Gold flagging right here under highs. This looks good, obviously dependent on the dollar. If the dollar rolls over, then this could see a nice breakout out of this high flag. GDX lagging here at the 50-day. Silver relative weakness as well. Bitcoin, one of the leaders today as well, up 1.5%, and sometimes you see Bitcoin and NASDAQ are the more risk on sectors, and sometimes they move in unison. But this is trying to put an undercut and reclaim of this 30 spot. So we'll see. It's a key level to hold, and maybe it starts to build a higher low here, remounts those moving averages, or rejects that 50-day moves lower. We'll see. Bonds breaking out, strong charts, TLT as well, back through this 100 level. And we own TOTL in the portfolio acting well. With bonds breaking out, we have the yield breaking down, the TNX as well, breaking lower. Try to have thought it might undercut and rally off this low, but this is moving lower. If you go to a weekly, this just looks like a big stage 4 top, head and shoulders, rolling over below the moving averages. So we'll see. This will be an interesting one to come back on in a few months, but looks like it's heading into a stage 3 decline. Tell the tape. So what happened today? News-wise, there wasn't a whole lot. Tomorrow, we're keying in on the CPI, and then we have the jobless claims tomorrow. Keys still, the S&P held the 100-day, still not above the 50-day, and then the QQQ actually reclaimed the 150-day and holding above the 200-day. So that's good to see. Sectors-wise, real estate continues to lead. Art getting a little bit of a dead cat bounce. Bitcoin, I mentioned. Home builders remain strong, and semiconductors getting a bounce today, primarily led by Avgo, which was quite strong today. I'll mention that when I get into the charts. And then weakness, crude oil is hitting 3-year lows along with gasoline. So the recession narrative might be coming back alive, energy as well. Financials are weak today. I'll go through some of those charts, which financials actually have been one of the leading sectors off the October low. So interesting to see these starting to roll over. And it's funny, a couple months ago, Jamie Dimon publicly said that he doesn't think you should buy JPM stock for a number of reasons, and that's got a hard break today. Regional banks weak as well. In-house, all we did was sell race for the last bit of the partial position for a gain, as it was meandering a little bit too long at the 21-day. Keys for Wednesday, we're still keying in on the same thing. And bottom line, day 2 bounce 10th led by tech, CPI on deck. So, sorry, let's get back into the chart, some charts of interest. So we'll start with the 21/21 list per usual. Let's see, relative strength wise, IoT continues to be super impressive. Day 3 higher high in a week tapes notable. Sprouts Farmer Markets looks pretty good in this high handle base. Fortinet, pretty strong, letting these moving averages catch up. It's got short-term extended, but relative strength line's a huge tell here. C Limited, forming a little cheat here right off this prior high in this base. ServiceNow, super strong base on base formation here. This one looks like it wants to move higher if tech can start to bounce. Home builders, forming a nice flag here on the daily, clean downtrend line. And this is another sector that tends to move erratically on CPI. So one to watch, maybe on a positive catalyst with volume. This could be a nice breakout. Palantir continues to build on that S&P inclusion news. TOTL, I mentioned, COBE. Numerous of these financial service stocks are holding up well, and this is another one. Some weakness today. ARGX, medical name pulling back. Affirm. So I'll mention this right now, actually. So banks got hit today. If you look at XLF on volume, but actually closed above the 21-day by 40 basis points. But financials got hit this morning. Ally, ALLY, Ally Financial, their CFO cited weaker credit, and this kind of spilled off into the whole sector. This was down 17% today on huge volume. That's a pretty bad sign. And then this spilled over into the buy now, pay later stocks. Affirm losing this gap low. upstart, just quite the 180 on this one. We own this one in-house from here and actually sold right around here. And it proved to be right. Can't really fall in love with the story, and especially with the volatility. It's an environment to take profits a little quicker. And then JP Morgan, big break, held the 100-day, but still nasty candle on volume. And then you got Wells Fargo. This one's bear flagging right at the 200-day. You have Goldman Sachs losing the 50 and 100-day relative strength line, breaking down here. So honestly, pretty bad look for the sector as a whole. We'll see if they can, maybe this was just too much fear, overreaction. I don't know, but hard breaks on volume. So this is a sector to keep an eye on. Sometimes when fear picks up and financials start to get hit, that spills over into the broad market. So we'll see there. Axon, this is holding up really well, and you could argue this is a Trump trade with for the police and all that. This one could benefit from a Trump presidency, but price action looks good. Race, we sold the remainder of this one, losing the 21-day, and volume to the downside has been picking up. Northrop Grumman, continue to see strength here in military and defense stocks. General Dynamics attempted a flat base breakout today, closed back through the pivot, but this is a nice looking base and somewhat similar to Race, which we did buy in-house on this breakout. So we'll see, but lots of momentum in that sector still. And then Shark Ninja holding up well, but it is at that profit zone. Kava holding up great. Flutter, Don mentioned it in the video yesterday, but this one's breaking out of this mini base formation, and this is in that sports betting stuff. So with the NFL season back on, college football back on, could see some rotation into these. DraftKings has been perking up a little bit, building higher lows, but has a big downtrend line that it's coming against that's been resistance, and this has been a serial laggard for the last few months after leading off the bottom. So one to watch. Some other names, ON strong, pulled back to this 44.30, undercut reclaim, coincided with the 21-day, acting like a leader. GEV continues to form this high flag here, holding above that 200 level. Tesla, this one kind of came back, light volume today, but getting back above the 50-day moving average, and definitely this shook some people out. So we'll see if this one can start to build. Does have this downtrend line, and really it's got this resistance here that it just rejected, which is around that 228, 230 area. And then Avgo, I mentioned, tech kind of led today. Saw a strong bounce off the 200-day. Take a look at NVIDIA coming right back into the 100-day. From this earnings gap, it held that high volume close. So that's a key level to key in on. And that level is around slightly above 100, 101 and change. So key level to watch to hold, but still, longer time frame. This has had serial lower highs and relative strength deteriorating along with trading below the key moving averages. So, but the stock is big for the AI plus tech in general. So, yeah, that's everything. We have CPI tomorrow, initial jobless claims on Thursday. And yeah, the wind is not really behind the market's back right now. So mostly focusing on monitoring relative strength, sector rotation, and all that good stuff. So that is going to wrap it. As always, like to hear from you. My email is connor@revereasset.com. You can reach out to Dan or Don at revereasset.com. Phone is 855-REAL-WEALTH. That is 855-732-5932. And if you're ever interested in becoming a client, please reach out. And with that, I'll wrap it for September 10th. This is Connor Bates with Revere Asset Management, telling it like it is. And also I wanted to add, if you enjoy the videos, leave a like, subscribe, comment. We reply to all the comments. So if you like it, that's always greatly appreciated. Thanks for listening and have a great rest of your night.